When it comes to building wealth, two paths dominate the conversations: stocks and real estate. Both have created fortunes. Both have passionate fans. But which one actually grows your money faster? And which one fits your life best? In this video, we're going to break down stock market versus real estate in plain English. We'll compare returns, risks, flexibility, and effort. And I'll share the strategy that wealthy people use to combine both for maximum growth. If you've ever wondered which path leads to freedom faster, this is your roadmap. Let's dive in. The biggest misconception: it's just about returns. Most people think the winner is whichever investment has the highest return. But here's the truth. Returns matter, but they're not the whole story. Liquidity, leverage, risk, and effort matter just as much. Wealth isn't just about how fast your money grows. It's about how much control you have, how much time it takes, and how scalable the strategy is. It's not just about returns. It's about liquidity, leverage, and control. The case for stocks: simple, scalable, and liquid. Let's start with the stock market. Why do people love it? Well, there's historical returns. The US stocks have averaged about 7 to 10% annually over decades. There's also low friction. You can start with $10, automate contributions, and invest from your phone, so there's an ease of access to it. And liquidity. Need cash? You can sell shares in seconds. Your money's not really tied up that much. Diversification too. With index funds, you own hundreds of companies instantly. But stocks aren't perfect. What are the downsides? Volatility. Prices swing daily. If you panic and sell low, you lock in your losses forever. There's also no leverage for beginners. You invest what you have. Banks won't loan you money to buy stocks. There's also behavioral risk. Trying to time the market kills returns for most average investors. Stocks offer simplicity and scale, but volatility tests your patience. Here's the case, on the other hand, for real estate. There's leverage and control. Why do people swear by real estate investment? Well, number one is leverage. You can control a $300,000 property with $30,000 down. That magnifies your returns. There's also cash flow. Rental income can offset costs and create passive income. More than that, it's a tangible asset. You can see it, you can touch it, you can improve it. And there's also some pretty notable tax advantages. Depreciation, deductions, and 1031 exchanges can save thousands. But here's the catch. There's a high barrier to entry. Down payments, closing costs, and maintenance really add up. There's also illiquidity. Selling takes time and costs money. There's also active management. Tenants, repairs, and market shifts require effort, or at the very least, outsourcing. Real estate offers leverage and control, but it demands capital and management. The numbers. Which grows faster? Let's compare. Stocks. 10K invested in an S&P 500 index fund at 8% annual return for 30 years grows to about $100,626. No leverage, but full liquidity and zero maintenance. Real estate, on the other hand, $30,000 down on a $300,000 property, appreciating at 4% annually for 30 years, grows to about $972,000 in value. plus rental income. Leverage accelerates growth, but cost and effort reduce net gains. So which is faster? Real estate wins on leverage, but stocks win on simplicity and liquidity. The psychology behind the choice. Stocks feel abstract. They're just numbers on a screen. Real estate feels tangible. It's bricks and mortar that you can touch. That's why many people trust real estate more, even if stocks outperform over time. But emotion isn't strategy. The best choice depends on your goals, your risk tolerance, and your lifestyle. Remember, choose based on goals, not feelings. The best answer, and why wealthy people use both. Here's the truth. The richest investor rarely choose one or the other. They combine both. Stocks provide liquidity and passive growth. Real estate provides leverage and cash flow. Together, they create resilience and scalability. Here's how to start without feeling overwhelmed. There's a practical roadmap. Step 1. Start with stocks. There's a low barrier, instant diversification, and automation can help you begin. Number 2. Build an emergency fund and kill high interest debt before scaling. Step 3. Add real estate when you're ready. Start with house hacking, or REITs, or a small rental property. Automate both. Dollar cost averaging for stocks, auto pay for mortgages, and reinvest rental properties. Start with stocks, add real estate later, and automate everything. Here's a bonus, the hybrid strategy. Want real estate exposure without managing properties? Invest in REITs, real estate investment trusts, inside your brokerage or retirement account. You get real estate diversification, liquidity, and dividends without the headaches. REITs give you real estate exposure without the headaches. Here's a few common objections and simple answers to help keep you motivated. Common objection number 1. Real estate feels safer. I don't know that I'll put any in stocks. It's stable, but concentrated. Stocks diversify instantly. Common objection number 2. Stocks feel risky. Risk is volatility, not permanent loss. The key is to stay invested and not lock in your losses. And common objection number 3, I can't afford real estate. I don't have enough capital to start. Start with REITs or house hacking. Scale later. Remember, stocks win on simplicity, liquidity, and scalability. Real estate wins on leverage, control, and cash flow. The real winner? Whichever strategy fits your goals and combines both over time. Start small today. Automate one stock investment. Research one real estate option and commit to building a system, not chasing a trend. Quiet consistency beats loud predictions. If this helped and you want calm, practical finance videos that actually work in real life, please consider subscribing to the channel. Leave a like. It's free for you and it helps me immensely. Join thousands of people just like you, building freedom one smart decision at a time.